What's going on, guys? Welcome back to another pre-market watch list. Appreciate you guys for tuning in. What we're going to do is run through some popular stocks here this morning. We kind of got a lot to cover, so let's try and get through this as quick as possible. The first thing that we're going to start with is Gamestop. There's probably 6,000 million YouTube videos out there right now describing GameStop and why it's going up so much, and Reddit this and Citron Research that, and it's the biggest epic short squeeze of your life, and the company's a piece of shit, it's going to go bankrupt, they are I mean, there's a trillion YouTube videos out there, so if you want to learn more about that, just go watch somebody else's channel. I'm just going to make this really simple for you. I don't know exactly how high this thing is going to go. It surprised me already, but nonetheless, we would still say it's a terrible stock to buy given how expensive it is, the company behind it, and where it's really at. So for right now, we have price targets for GameStop at 51 and 39, 40 bucks. So pretty much right now, our price targets for GameStop are $50 and $40. When the market opens, I could see that maybe jumping up to like $60 to $50. But for right now, our target for GameStop is back to $51 to $40, and then eventually down to $27 and so on. The squeeze right now is epic, but essentially what's happening is people have been bearish the stock and they're getting forced the opposite direction. It's called a short squeeze. So right now, our targets for GameStop are back down to 50 and 40 bucks for the time being. And if you want to learn anything more about GameStop, go watch the other 6,000 YouTube videos out there, because there's plenty of people, I'm sure, that have covered it. All right, next one we'll talk about is Neo, because again, everybody loves Neo and the Matrix. So Neo's kind of interesting. If you guys watched our videos from a couple weeks back, we had a price target, I think, of like 75 to 74. Right now, our current our price target up right now is actually 71.42. It used to be 74, but now we're currently at 7. We're looking for a price target of 71. To potentially, I mean, really we have price targets as high as 82 bucks, but for right now that's really far away, so we're not going to suggest that. We're just going to be looking for a 71.42 price target right now. And we're going to explain these two levels here, this red one and this green one, which I actually have to update this. Hold on. So we're going to move that up a little bit, change it back to green. Okay, so the green is meant to represent the current support, and then this red is meant to represent the current resistance. So if you look at the 4-hour chart on the left, you'll see that I put a green line over this dotted line here, and then if you look at the screen on the right, I put that red line, which is actually off. Let me zoom in, move that down, and take that one off. Okay, so I put this red line here. So all I'm saying is when we go and look at this 1-minute chart, you're going to see that this morning pre-market, Neo has stopped around the 64.40 price, which is where we have our level. And the current pullback support right now is about 62.50. So we're bullish on the stock Neo with the potential pullback to 62.50 for kind of a long dip area. But a breakout move can exist over 64.36 for right now. So if the price is getting through 64.36, we're going to anticipate that Neo moves higher in the day. More towards the prices of $71 potentially. So maybe not 71 today, but it's possible. So either way, we're bullish Neo. Potential targets as far as 71.42 for right now. Small little mini breakout, looks to be at about 64.36. Pullback dip support on the day could be as low as, what do we say? 62.60 or 62.50 or 62.70 or something like that. Okay, on to the next one. So there's a couple ones that we're just going to kind of fly through right now. AMTX is a penny stock that was up this morning. It's getting sold into now. I don't think you should be, I think you should be slightly bullish on this, but it is kind of overbought, and I'll explain why. If you look at the long-term chart here, long story short, blues resistance. Here we are at 692 resistance, and we got this other resistance mark right here at 722. So you can see that right now the stock has been struggling to get through the 720s price as we've got up into this high point. So for anywhere from the 690 to 720 is resistance, and you can see we stopped there pre-market, went back up over it, then it got stopped, back down, chopped, back down. So right now the 690 to 720 is your resistance, but if the market can successfully get up and through those prices, you're going to force a little bit of a breakout move. So that's what's going on with AMTX. Now let's go over look at EXPR. EXPR is Express. Currently, the market is buying up anything that is kind of like GameStop. So if you think of Express, and if you think about AMC 20, these are some stores that have been hurt during the pandemic. And just regardless, what's happening right now with EXPR and AMC is their sympathy plays to GME. So GameStop went nuts, big short squeeze. Express and AMC are two other stocks that have, you could argue, some similar characteristics as GME, and that's why people are buying into them. So AMC and EXP are pretty much getting hyped around the internet, and people are saying to buy them up because they're exactly like GameStop and blah, blah, blah. They're going to have a big move. So again, it's just another one of these pump hype things that's going to be here today, gone tomorrow sort of play. So right now we're watching EXPR. We're not extremely bullish on it with the way it's set up currently. Unless EXPR comes down further, goes into, like 345, we're not going to be looking for a counter dip trend buy. So right now, EXPR is just kind of on watch. It's extremely overbought. Right now, we still have price targets back on the downside as far as $3.32 for EXPR. AMC is arguably, maybe a little more bullish than EXPR, but again, if we go and look at the long-term charts here, you have a potential move to 646 and a potential move to 739 on AMC right now. So when I was saying that AMC is like slightly more bullish than EXPR, it's not that it's like slightly more bullish. It's just that AMC still has potential moves up to like 730 and 620s, 640s before it goes into a long-term overbought sort of scenario. So on the long-term charts, we still have room up to 640 and 730, right? But if you look at EXPR is already over long-term trend, so it's way overbought. So this isn't like extremely overbought, but it's overbought. So again, I'd be more bullish on AMC only because the long-term charts still allow for it to go higher, whereas EXPR might have more of a fight given where it's already been pushed to. So those are another couple ones we're going to be watching throughout the day. Also, looking back at GameStop, earlier this morning, there's really not much you can do with this. I mean, we can't short it. We could buy options on it. The options are just the premiums on them are. So again, let me just rephrase this. There's no shares of short on it. They're all gone. So that sucks. There's options that you could trade on this, but again, you have to go pretty far out to that way you can guarantee that you're not going to get squeezed out, and then you catch kind of the dropping move, and those are going to be through the roof expensive because the market makers know that this thing will crash. So if you go further out, they're going to jack up the price on them. The premiums are high, so there's really no efficient way to currently get in this market for the time being that I see myself. So it's more or less just one you watch and go and just kind of play around in your mind. Like I said, I have no emotional attachment to it. I don't care what happens. I have price targets of $50 to $60. That's more for just my own learning and to see if that I can do analysis on this correctly and see if it plays right. So really nothing to do with GameStop for the time being. And it looks like GameStop might be doing an offering soon as well. So that should maybe bring the price down a little bit. Next one on the list of things I want to talk about is the SPY, and then once I get through that, we probably SPY maybe the Nasdaq. We'll pretty much be good to go. So for the longest time, we were kind of suggesting the market was going to get to like 380 to 390s. That was our price target. So back when we were trading about here, our price target in the market was like 380s to 390s. We hit 385. The market, I don't make much sense of it. It scares me to death, but we don't really have, unless some like cataclysmic event happens and it just drives the price lower, the market should still go up. I don't really see any need for the market to come down currently. So unless there's some outside cataclysmic event that drives the market down that we don't see coming, I don't see a need for it to go down, and I would anticipate markets are probably going closer to 400. What makes me most nervous isn't really the S&P 500. What makes me most nervous is the Nasdaq. Now, I can't say that this 20-year chart is going to be the holy grail chart that, you know, forces the market lower. But if you look at the Nasdaq's 20-year chart, and if you guys know, you know, me and you follow this channel and how we go about doing things, you'll know that whenever we see equities trading at the blue line, we always bet bearish, and that's usually where a big drop's going to happen or a corrective move in the market, but more or less a crash in the market. So when I look at the S&P 500 doesn't really scare me, and I'll show you why. Oh, hold on. Yeah, so we'll just run through like the Dow and the Nasdaq here real quick. So if you look at the SPY here, you know, like the SPY makes me nervous. I mean, if you look at this, I mean, it's just going up, up, up. We've had a couple pullbacks, and then we're just straight up here. So, I mean, this is a very exuberant market to begin with. Doesn't mean that it can't go higher, but we're really starting to grasp a lot of people to the stock market that typically would not be in the stock market. And that's kind of like that saying that when the taxi driver is giving you advice on stocks, it's time to sell. And, you know, over the past years, I've been seeing a lot of my friends that really know very little about investing, which is fine, getting involved in the market. But, you know, that's telling me that the market is starting to attract pretty much every single customer it can. You know, so again, imagine if there was only 100,000 people that could buy an iPhone. Once Apple has reached those 100,000 people, there's nobody else there to buy their phones other than the same people, right? So it's starting to feel like that, where we're really attracting majority of everyone to the market, especially as we're going crazy high here. So if you look at the Nasdaq is not near 3 deviations. The SPY would have to go to 481 to be near 3 deviations right now. But if we look at the Nasdaq is not very far off, and the Nasdaq has been what's really been leading this market. Tech stocks, high growth stocks have been really leading this market through for the last many years. And so when we look at the Nasdaq here on this 20-year chart, 15,000 would right now kind of be arguably the top point. So I will comfortably come out and say on this YouTube video, if the Nasdaq runs to about 15,000 with the way we're situated right now, and by the time it actually happens, it might be 15,200. But for right now, it seems that if the Nasdaq were to go up to 15,000 within like the next, just call it 2 months, then the stock market would crash. I know it sounds crazy, but really, I mean, I think that if we saw the Nasdaq up here to 15,000 trading that way, we would start to see a lot of bearish activity coming into the market, selling this down. And then we would have a big swing move lower. So that's really, and again, that's what makes me most nervous right now. This is from a clear technical 20-year chart, looking at how aggressive this move has been going up. I think if we reach 15,000 here on the Nasdaq and we're over this line, it gets ugly. And that's my prediction. So that being said, I'll see everybody in the next video. Everybody take care and have a great rest of your day.